To the moon. What's happening? Wow, I can listen to that all night long. All right. Good evening, Coochie. What's happening? Kendall, Max, Bexon Mendoza. Max, what's going on? Grip and Rip. Mooncat, Joseph, Bama Terry, what's going on? Chad, how are you this evening? All right, what are we doing tonight? Are we doing like the same thing we do every night? Over and over and over again? Sometimes I wonder, where am I supposed to start? B-Rad Daddy, what's happening? Bill Parker, what's going on? Just here to report, to support, just here to support. What's going on? D-Mac, Flacco, Lucy, Big B, Tito, Mariah on fire. Oh, I like that. Chasing Jack, what's going on? The other chip has an echo. Uh-oh, has an echo. How do we get rid of that damn echo? Shit. I'm at a loss. How do I get rid of that echo? What would it be? Let's go and check it out. Let's check it out. Got to check it out real quick, see what's going on. Someone said there's an echo in the other room. So we got to check that out. Got to go to the, what do you call these things? YouTube channel. All right. Echo. All right, there's that one. Which one has the echo? Oh, this one. Okay, let's find out. All right, there's an echo. Let's give it time for this. Why can't I hear it? That sounds terrible, doesn't it? What is that one that has the noise in the background? Could be. Yeah, it is that one. Holy cow. Volume. All right, that one's off. Let's turn this one back on again. Because I need volume on one of them. That one's clicking too. So I'm kind of curious what the hell that noise is from. All right, that one's off. Let's turn this one back on again. Okay. That has an echo. Give it a second or two while we figure this out. Changing to this one. All right. Is always been like that. All right. Always been like that. Shit. Okay. Get rid of that one. All right. That better? Been like that. Get rid of that one. That one? Nope. Now they're both down. That one. And get rid of that one. Okay. That better? Hello. Nope. Now they're both down. Hello. That one. Yeah, the echo seems to be gone now. How's that? That sound better? Buffering. That better? Sound better? It does sound better. At least I think so. All right, so let's get out of this one. Get rid of Yahoo Finance, because I know we're going to need Yahoo Finance at some point later on today. Hopefully I took care of that problem. Muted both of the screens. And here we go, AT&T. All right, so let's get rid of that. Put that down right there. All righty, so shall we get started? I think Jay Muway, Paul Rod, what's happening? What do we have over here? Okay, everybody's just saying hi. Who do we have? GMC, Italia Ben, Kilroy, Mr. Ropper, D's Nuts, Debbie, good evening. Dog, Chris, Tony, what's going on? Lando, Lisa, Mr. Ugly's in the house, Boudreaux, Bebo, Fubar, Michael McMia. All right, Gabriel, Tim, what's going on? What's going on? Brian, Robert, Tyler, what's going on? Jerry, Kirby, hello, hello, hello. Russ, what else do we have here? What do we have here? Joseph, Mooncat, we already said hi to you guys. Mason, how you doing? D-Mac, Huts. All right, Jenna, good evening. Dean, Carolyn, Jason, Captain Doug, Purge, Robert, Jason, William, Seaman, good evening, good evening, good evening. Kevo, can you explain the risk reward buying Walmart at 94 and selling the 90s for next week's? All right, let's check it out. Let's check it out. Wally World, WMT. Oops, I want to change that real quick. Don't want a line chart. Here we go. I want that one. I just want the regular one. Regular candle. Little different. All right. All right. Alrighty. First one on the list today is going to be Wally World. Let me change this a little bit. Okay, see if that's any better. No, not really any better. Why am I seeing that? Okay, I can move that light just a tiny bit. Oh, much better, I think. Is what it is. All right, so let's get started. First and foremost, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for a ride for a simple, safe, predictable, consistent 1% per week. Now, I use a trading strategy called covered calls using weekly stock options, only on dividend stocks, specifically dividend stock companies that are consistently profitable. Now we're talking 20 years of consistent profitability. That's what I like. Because see, when you get retired, things change. Your outlook changes. What you expect changes. Where my money comes from changes because I no longer punch a time clock. So my money's got to come from somewhere. I'm too young to get Social Security, so it has to be my investments that bring me in money so that I can pay my bills and I can live here in this wonderful little country of ours. That being said, let's take a look. Now, as the night progresses, I'm going to explain what I'm doing and I'm going to show you the trading strategy I came up with for my 9-year-old daughter. Well, you're probably asking why. Well, when my daughter was 9, okay, hey, it's Hakuna Matata. What's happening, brother? All the way out in Switzerland. I think it's Switzerland. All right. Now, when my daughter was 9 years old back in 2008, she climbed up my lap one day and said, Daddy, what are you doing? Can you teach me? That was it. 9 years old. Can you teach me? My mistake, Hakuna Matata is from Sweden. Just seeing if you were paying attention, that's all. All right, so when she was 9, she said, Daddy, can you teach me what you're doing? So that being said, when you're trying to teach a 9-year-old when most adults don't understand it, think about it. Most adults don't understand it. So here I am trying to explain to a 9-year-old how to trade stocks. Okay, so the trading strategy that I came up with took me a little bit to figure it out, but here it is. Simple, safe, predictable, consistent, and no way for her to lose. That's what I created specifically for a 9-year-old daughter. All right, so 5 rules. Rule number 1, never buy something you don't want to hold on to for the rest of your life. If you're not worthy of putting your money into it, don't do it. Now, I go in with the intention of holding it long term. But if it's going to give me a profit like that, I'll take it. Because you know what? I have another stock right around the corner. They'll do the exact same thing. Let's finish up. Number 1, never buy something you don't want to hold on to or you don't understand, one or the other. Number 2, never sell at a loss. It defeats the purpose of the game. And yes, it is a game once you understand the rules and once you know a few things that other people don't know. It makes you a little bit more accurate in your profitability. Rule number 3, make sure the company is consistently profitable. This one boggles my mind for some strange reason. You guys, some of you, will take a look at some stocks that make no sense whatsoever. Rule number 4, weekly options only. Well, the reason I say weekly options only is because I'm looking for weekly cash flow. I have no desire whatsoever, no matter how much you think a stock is awesome, wonderful, the greatest thing since sliced bread, I have no desire to put my money into anything and sit and wait for it to do something. If I can't get money from it every single week, I don't want to even hear about it. It's just another obstacle, shiny object, squirrel. That's all it is. Yeah, sometimes it works out. It works out great for a lot of people. But you know what? I'm at that point in my life where I no longer desire to take those kind of chances. Safe, steady, slowly works perfectly fine for me. 1% a week, I am perfectly 100% happy. And it boggles my mind. Every week, someone's trying to pitch me on something. Yeah, you could do much better with this. Yeah, I probably could. But you know what? There's always a risk-reward ratio. It's always there. There's no way you're going to get away from it. So I would rather have the lowest risk and the lowest ratio of winning. 1%. That's all I'm looking for. 1% every single week. It's really not that big a thing to ask for. All right? Now, as we progress, you're going to learn little things here and there and there. You know, you'll learn a little bit of this, a little bit of that. Everything will come together in the end. And I'm here every single night, except for Friday nights and Saturday nights. Because if the market's open tomorrow, I'm on the night before. Okay? So the market does open tomorrow, so I'm on tonight. Maybe get some of you guys warmed up for the week coming up. I think it's week number 29 for the year. Week 3 for the third quarter, or week number 29 for the year. Okay, there's only 52 weeks in the year, 13 weeks in each quarter, and we are now going into week number 3 for the third quarter. Yep, the year is more than half over, and guess what? It didn't end. Old Trumpy boy gets in office, and no, the world didn't end. Here's what it is. Okay, Chasing Jack. Where are you putting our money this Monday, Jack? That's what we're going to find out so soon. Masha. Bro, you're so... Okay, thank you for that. Hi. Is there anybody else? I don't know. All right, so let's keep on progressing. We got somebody over here who wants to take a look at Pepsi. Be Rad Daddy, we're going to take a look at Pepsi as soon as we're done with Wally World. So let's do Wally World first. Now, as you did 3% last week, awesome, dude. I don't even think I did 3% last week. But then again, I get more accounts than you do. So I got to like average everything out. But great. Good for you. 3% for 1 week. Now, a lot of people think that's not a lot of money. And you're absolutely 100% absolutely correct. I cannot tell you how correct you are. 1, 2, 3%. It's crappy. It is. But guess what? Crappy, but consistent. Think about it. I'll take crappy and consistent every single week. As a matter of fact, I do. I have over 1,100 videos. 1,100, that's 1,100. More than 1,100 videos on YouTube saying the exact same thing over and over and over again. But think about it. Every single video, okay? If I'm only looking for 1% per week, well, you know what? That's over 50% every single year. And if it takes me 10 or 15 minutes every day, fine. Brush my teeth, take a shower, get something to eat. It's just one more thing to add to my day. So I lose 5 or 10 minutes of sleep. Yeah, but guess what? I have a nice, comfortable retirement. Okay, no, I cannot go out and buy the Hope Diamond. Can't go out and buy me a new Lamborghini. Nope. Can't get one of those houses on the beach. No desire, no desire, no desire. Okay, I live a simple life. I'm perfectly happy where I am. Jack, you got 3% on 50 grand. That's more than I make in my full-time job in 2 weeks. Oh, brother, you know what? Consistency. Don't let it go to your head. Don't think you know everything. Just take it one step at a time. Stick to the basics. Simple, safe, predictable, consistent. If you do 3% every week, you're beating me. And hey, more power to you. I think it's awesome. Good for you. All right. That being said, let's take a look at Wally World. As you see, I'm going to do things by the, by the ABCs. A, B, C, things, whatever. Or if you do the numbers, 1, 2, 3. First thing I always do is take a look at the 1-year chart. That's the first thing. And it should take anywhere from 3 to 4 seconds. Seriously. Because you're only looking for 5 simple things. You might think, well, how am I supposed to find that in 3 to 4 seconds? It's not that difficult, really. Seriously. Okay, number 1, the high. Okay, wasn't that hard, was it? Number 2, the low. Number 3, where was it a year ago? Number 4, where is it now? You can see all 4 of those things in like 1 second. High, low, okay? The one that takes the most, takes about 2 or 3 seconds, is the motion of the ocean or the flow of the river, the trail through the woods, whatever you want to call it. Up, down, up, down, up, down. Okay, it's not that difficult. Up, down, up, down. It's simple. Just take a quick look. What am I looking for? Well, I don't want it at the high of the year. And I don't want it at the actual bottom. That gives me, within 2 seconds, I can tell, nope, it's not at the high. Nope, it's not at the bottom. Great. Next. Okay, so next step is the numbers. What is it going for at this moment in time? Well, at this moment in time, 94.40. That's the current price. Now, I don't make up these numbers. Okay, this is Think or Swim, available through Charles Schwab. You can use Fidelity. You can use Robinhood. You can use Webull. You can use whatever trading platform you want. They all basically have the exact same thing. What's the high? It's the high. What's the low? What was the opening? What was the closing? How many what volume? How many shares traded that day? Okay, and then over this side, it shows you the candlesticks. The high, the low, the motion, all that kind of stuff. It tells you everything. You can go almost any financial website and find this information. I just happen to like Think or Swim because I've been doing this for a long time. 15 years ago, I wrote a book on choosing the right trading platform, and I researched quite a bit of them. This is the one that I like because this one had what's called the trigger trade. No other trading platform had it. Allows me to buy something and sell it almost at the exact same time. Okay, I buy it for this price, and I said, all right, I'll give you a brief. I'll let you peek behind the curtain for a second. All right, I got to change up a few things. How about this list right there? All right, this list right here. Okay, so this here behind me is called an ex-dividend calendar. Okay, so I take all the stocks that I like, I put them into the calendar. And the calendar tells me when they're going to pay. And holy shit, it's Medina. What's happening, brother? It tells me when they're going to pay their dividend. Well, why is that important? Well, that's important because most of the time, usually, frequently, almost always, whatever word you want to use, but almost always, the stocks have a tendency to go up in value just before the EX date. So it's marked on the calendar. Matter of fact, the first book I wrote was 10 to 20 checks per month, like clockwork. Buy it before the EX date, grab that little tiny bit of a profit, jump out, and then jump into the next one. You'll notice every single week has a different stock on it. Well, this is just one of my lists. I got about 6 or 7 lists, all looking for something different. But for the most part, they're all basically the same companies. consistently profitable for more than 2 decades. Why would you put your money into a stock that's not consistently profitable? That one boggles my mind. But you will see tonight. You will, because it happens every single night. People will ask me to take a look at something. I'll look at it and I'll say, what the hell were you thinking? Because it's not consistently profitable. There's companies that have been in business for over 200 years here in the United States that are still in business today. There's a whole bunch of them that are over 100 years, and they still profitable and they still increase their dividends to their shareholders. So why aren't you investing in those? It's a good, solid question. If the company's been in business for over 100 years, they're consistently profitable, they increase their dividends to their shareholders. That's us. When we buy and sell, we are the shareholders. So when that happens, why wouldn't you put your money there? I know people are looking for that quick buck. They want to buy something today and be able to retire tomorrow or the next day. Greed. There's nothing wrong with it, but sometimes it might bite you in the butt if you're not careful. Lord and my ex-wife both know I've done stupid shit in the name of greed, and I paid for it many times, and I'm still paying monthly. Just kidding, no. All right, anyway, so the ex-dividend calendar tells me when the stock is getting ready to move. Now, by knowing that, you have a little tiny bit of information that not everybody has, because you have a good idea, because they get the dividend coming, Caterpillar, that the stock price might go up in value. Well, that's only part of the equation. What do you do with the information? That's what usually throws people. Hakuna says the consistency is the tricky part when investigating inequity. Okay. I hope you're good, sir. I'm wonderful. I got to go to bed. It's 3 a.m. Yeah. Because you're on the other side of the world. Anyway, let's continue. All right, so let's see exactly what Wally World looks like. Where are we? Right there. And right there. All right, so we know where Wally World is. Okay, up, down, up. We're currently at 94.40. It's actually in a downturn at the moment. Okay, this is about your last almost 30 days. Up, down, up, down. So we got 1, 2, 3, 4 days to the downside. So what I'm going to do is I'm going to write Walmart down for this week, because as soon as it finds its bottom, okay, see, it's falling, and it's going to keep falling until it finds the bottom. Once it finds the bottom, okay, 2 days to the upside, then I want to jump in on day number 3. Now that's my rule for me. So going in, that's my rule. So anytime you see a bottom, all right, once it goes next day up, then I'll go in on number 3. Oh, you got stock APLD. I have a stock. Do I have APLD? I don't know. I'll have to take a look at it. 3% on 50K. Yep. My goal is 300 saved before I quit my 2 full-time jobs. Holy cow. 2 full-time jobs, dude. You're at 50 grand. It's only at 250. Well, if you keep getting 1% on your 50, hold on, let me think. Because hypothetically speaking, if you keep investing in the compounded interest, that 50 should double in 14 to 16 months. And then another 14 to 16 months, it would double again at 50 to 100, then to 200. Okay, so I'm thinking about 4, 5 years, go from 50 to 500, or 300, 50 to 300 in about 4 or 5 years. Yeah, that's doable. Cool. I'll be here, because I'm just getting this. Now, for those who don't know, those of you that are new here, I'm just getting this business started. Okay, so in order for me to open up a hedge fund, or what are they calling, investing fund, I need to have 2 solid years of good quality, high quality trades that are verifiable. So all these trades that I do that are verifiable, they're videotaped, and they have the the audio and the video that goes along with it. So it'll be easy for a third party, non-biased party to come in and find out, check out all the numbers, make sure the T's are crossed, I's are dotted, blah, blah, blah. And then I will apply for that, what do you call it? That hedge fund thingy, because I need those 2 years of under my belt. So that'll be this December. That's just the beginning. That's just the beginning of the journey, because I got the 2 years under my belt in December. Then we actually open the corporation and start selling the shares, and then we start selling the bonds, and then we start doing all the investing, blah, 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 all that kind of nice, neat, fun stuff. So you guys get to be here at the beginning. You guys are here before the foundation is even laid out. That's pretty cool. When do you get to see a corporation start from the beginning and then work its way up? Well, that's what I'm projecting for in the future. So in 20 years ago, in 20 years' time, you'll see, yep, I remember when that guy started out 20 years ago on TikTok and YouTube, chasing Jag. My first plan was putting $1,000 a month out of my own money, and it was going to take me at least 10 years. That's 12, wait a minute, $1,000 a month is only $12,000 a year. After I found out about you 5 months ago. All right, well, we'll see. We will see if you're still here in 6 months. Now, I've been doing this since, December 22? 23, 24? Yeah, December 22. Cool. All right. You cut my time more than half. Hey, cool beans. Can't wait to see what my Christmas card looks like. Anyway, so let's finish up with Wallet World. Now, although I like Walmart, I do. Okay, you get your 30-day bottom here, your 30-day top is here. So we'll get some profit taking place. So 1, 2, 3, 4 days at the downside. Eventually, we're going to find this bottom. So let me go back to the question that brought us here. What is the question that brought us here? Jonathan, how you doing? Oh, where was it? All right, right here. Kev, can you explain the risk-reward ratio buying Walmart at 94.40? Well, it's at 94.40 now. Selling the 90s. Wow, the 90s. Hold on, I gotta really dig for this one. The 90s. There it is right there. Okay. 980. Well, unfortunately, okay, it's at 94.40 now. And next week's 90s are only going for 450. That's not the 980 you're talking about. Because if you add this to that, that's what you're walking away with. You're walking away with 10 cents. Well, think about it. 94.40, you're selling for 90, you're picking up 90.50. So the difference between that and that is only 10 cents. That ain't worth it. Because 1% is 90 cents. And that's at the money right now. 94s. You'll make your 1% at 94. Not there, but it's still dropping. So you could buy it tomorrow at 94.40 where it is. But you don't know if that's the bottom. Because it could go lower tomorrow. It can go lower Tuesday. It can go lower Wednesday. You got to wait to find a bottom, and then she turns around and goes up. But I hope that answered the question. All right, so B-Rad Daddy wants to take a look at Pepsi. Now, we've been watching Pepsi for a couple of months, waiting for it to find the bottom, and apparently it did. So let's find out. Oh, Scotty Cook's in the house. What's happening, Scotty? Uh-oh. What happened? I missed my thing. All right, right there. All right, give me a second, and I'm going to check with these questions in again. Will yours chasing Jack? Oh, with my strategy. Thanks, MMB. Oh, G Money. What's happening? Thank you for that, brother. That was nice of you. Or sister. I don't know. Just a G Money. Could have been a she. I don't know. Cut time and a half. What do I trade? Big G Bunky. Big G Bunky. Interesting name. I trade dividend stocks and weekly stock options. MBM, hi, how do you know when and where is the bottom? Because the stock tells you where the bottom is. I'll give you a brief example. Okay. All right, see right here where it starts going down? There's a top here, and it's starting to go down. Well, let's do it one day at a time. Look, next day, it's lower. So now you get 2 days to the low side. Oh, another lower day. Another lower day. Whoops. See, it just keeps going down, 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 down. And you know when it's the bottom, let's keep going, right there when she turns around. See? Down, 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 and now it's going back up again. Now, that's only 1 day to the upside. Okay, that could be an anomaly. Okay, you don't know if that is the bottom. So another day, hey, 2 days to the upside. Okay, bottom, 1 day up, 2 days up. So here is where I would jump in on day 3 if day 3 is higher than that. So day 3 is lower. See? So I wouldn't have jumped in on day 3. See, bottom, 1 up, 2 up. I'm waiting for the 3rd day to the upside from this bottom, unless this is lower. Well, let's find out. You just take it 1 day at a time. Stock market's been around for 400 years. Okay? 1, 2, not quite higher yet. See the bottoms? So I'm going to wait 1 more day before I jump in. There it is right there. Okay, here's the opening right there. I would have jumped in on day 1, 2, 3, 4, 5, the 5th day. Because I want 2 days the upside, and then the 3rd day I want to be higher than the 2nd day. Which it wasn't this one, it was that one right there. So you have to figure out how and where you call the bottom. That's where I call it. Okay, how can you tell? Well, you tell it's the bottom when it starts moving in the other direction and continues to move in the other direction. That's why I want 2 days the upside, and the 3rd day is when I'll jump in. Sorry, 50 to 60 RSI and letting the stock run into profit and then selling the covered call and doubling my returns or more. AMD letting the stock get called away. Hold on a second, Scotty. All right. Learning every day. Thanks, James. All right. I have been doing what I call a delayed covered call, but with a stock with a 50 to 60 day RSI. Okay. Hey, Scott, you know what? If it makes sense, if it works, that's what we should do. Hey, James, what about Humana? Oh, we're going to take a look at Humana in just a little bit. All right, I'm going to write that one down. I'll put my little marker next to it. All right, hey, Doc's in the house. What's happening, Doc? Mikey's here. Clay Shooter's here. All right, so that's Wally World. That's where I find the bottom when she keeps going down, turns around, and then goes back up. You have got to figure out what works for you. All right. A healthier you. Marty, good evening. Lil Joy, what's happening? That's me. You got it. Healthier. A healthier you. Hello. KG. Ooh. All right, hold on. Let's see if I know all these. COP, ConocoPhillips, ABT, Abbott Labs, LOW, Lowe's, PG, Procter & Gamble, HPQ, Hewlett-Packard. Hey, I knew all of them. I trade foreign currency, but have never tried my strategy on stocks. Cool beans. Chasing Jack. If 1% is not enough for you, he also has a trading group in the morning. If you're interested. Thanks, Jack. I want to join the trading group. Okay, DM me with your number. I'll give you a buzz. We'll chat. All right, so let's keep on doing this. Let's keep on keeping on. Well, what's your portfolio look like? Oh, A Biggs. Hey, Biggs, how are you today? Usually, A Biggs, most people just say hi, hello first before asking Melrose Place, Bill, before asking inappropriate questions such as that. It's like asking a girl what your cup size is. That's inappropriate. I did what you said, now I'm broke. Tom Papa. I want to join the trading group. Good evening. All right, Jack. All right. So, Tom Papa, I did what you said. Now I'm broke. See, the funny thing is, Tom Papa, I don't give advice. I don't tell people what to do. I'm sharing my strategy because I'm doing what's called a video diary for my children and my grandchildren when I'm gone. Just answering some questions as I go along. So I'm just seeing what I'm doing, and I don't tell people what to do. So if you did something and you lost money, that's a you thing. 'Cause I don't tell anyone to do. I always tell people never listen to me. What the hell do I know? Seriously, I'm not. I have no. What do we call that? No legal background. Did not go to school for it. Okay, I learned what I learned the hard way. Buy something, lose money. Well, don't do that again. Do this, lose money. Up, don't do that again. Okay, it wasn't until when my daughter, 9 years old, asked me, "See, Daddy, can you teach me?" I said, "Well, now I am stuck. I have to figure out something for her where she won't lose money." And if a 9-year-old can do this and not lose money, and you're losing because whatever you interpreted, I can't help you out there, brother. Terribly sorry. Okay, I come from a generation where we really don't apologize if you misinterpret what I say. Chasing Jack, Big Bunky, send him your DM with your number and he will call you personally. Yep. What's my number? Okay, believe it or not, G Bunky, my number is actually on YouTube, which you're on YouTube. So if you go into my profile and dig deep enough, you can find my phone number. Send me a text. Don't even bother try calling because I have a spam filter. So if I don't know who you are, you can't get through, but you can send me texts. All right, and I do answer my texts. I'm on that stupid phone more than I should be. This guy, no. Arda Yaman. Oh, I love trolls. I do. So let's see what Yada Trollman has to say. This guy doesn't know anything about stocks. Awesome. I love it when people are like that one. But yet, he just got the #2 gifter badge. So I don't know. He's saying I don't know anything, but he's actually donating. All right. Golf Club Rental. What's happening? I really want to learn this. Okay, Nova the Alchemist. I'm here every night. Just keep showing up. Keep asking questions. That's the best way to learn. I don't charge anything for what I'm doing. Do I trade options, futures, or spot market? Boom slang. I trade stock options only on specific dividend stocks. Very picky. No, I do not do MAIN. It's a monthly. I'm going to explain to you in a little bit. Little Rio. Okay. I want 30%, but my order won't sell. That's probably why. All right, I got to go back to where we stopped off. Where are the questions? I'm missing some questions. Hey, Sweet Dan. Thanks, dude. I don't even know what the heck that is, but it's sitting on my head. All right, here we are. Caught up. All right, Chasing Jack. A few new people here. James is like in 7 places at the same time. Be patient. Yeah, I just want to apologize for you guys who think I'm ignoring you. I'm not. I got 1, 2, 3, 4, 5, 6 phones, okay, which all going to a different channel. And then I have the open broadcast software that's broadcasting to 5 other channels. So I'm on a lot of different channels getting a lot of questions. So bear with me. I will try to answer every individual question as I progress. But if you do, Sharon, good evening. Sharon just sent me a text with your new picture. Okay. Don't know if that's appropriate or not, but I'll look at it later on. Anyway, let's just keep progressing. You guys are going to give me stocks to take a look at. I'm going to look at them. I'm going to give you my opinion. Now, what I'm doing is a simple, safe, predictable, consistent 1% per week strategy. Kohl's is offering a staggering 4 point. Ooh, holy cow. We'll take a look close to. So we're going to look at Humana and Kohl's. What else were we going to look at? There was something else. KG. KG, you're in the morning trading group, brother. Okay, so we can take a look at those in the morning, but I'll breeze through them really quickly. What's your usual expiration on the contracts? 7 days. How many contracts do you usually buy? I don't buy contracts. Okay, boom slang. 80% of all options expire worthless. So what I'm trying to do at this point in my life is stack all the odds in my favor. Okay, number one odd, I only want to do companies that have been in business for more than 20, 25 years. They have some kind of history, some kind of longevity to them. That's number one. Number two, I want companies that are consistently profitable, which means if I went and take a look at all of their annual reports, all the quarterly reports, it will show that the profits are consistently increasing. Or I can go right to the dividends, because a dividend is a portion of the profits the company gives back to the investors. So that, if it consistently increases, means they're consistently profitable. Okay, and then I want to do a trading strategy where it doesn't really matter if the stock moves or not. So if the stock doesn't move at all, I'm still making my profit. Now, unlike stock buyers, you buy a stock and the stock has to move up for you to make a profit. Well, the trading strategy that I'm doing, I can buy a stock at 94.40 and it doesn't have to move at all, and I will still make a profit by the end of the week. So if I buy it Monday, 94.40, and Friday afternoon, it's 94.40, I already made a profit. The trading strategy I do, a covered call, and I'm going to actually show you a few of them as we progress through the night, because I'm going to be here till 11. So I will show you a few of them, and you will see the stock does not have to move at all, and I am still making my 1% profit. Remember, the trading strategy I'm showing you was created for a 9-year-old. So if she, 9-year-old, couldn't do it, you guys can do it. I'm hoping you guys can do it, because in order to be here on this channel, you got to be at least 18. Now, every once in a while, a younger would jump in, and I was like, I don't want to talk to you, because people are weird nowadays. All right, so let's keep on going. Okay, so KG, I'm going to quickly go through those 4, 5. Holy cow, COP. See how quickly I can go through these and see if they're actually going to be decent for tomorrow. ConocoPhillips, COP. Ooh, that looks good. ABT. Not so good. LOW, Lowe's. Guess one of those. Procter and Gamble. No. Hewlett Packard, HPQ. I don't know. Okay, so we got 1 yes and 2 I don't knows. Well, let's take a look at them. Get a better look. Maybe you guys get an idea, see what I'm looking for. See if you can see the same things that I'm seeing. Now remember, when I look at a chart, I want to look for 5 things. And it should literally take you 3 to 4 seconds. So as I go through these again, see if you can see them as fast as I see them. First one was COP, ConocoPhillips. You ready? High, low, is, down, up. 3 to 4 seconds, right? The high's here, the low is here. It was here, now it's here. Went down, now it's coming back up again. Okay, try not to make it as complicated as you're thinking it should be, because it's really not that difficult. First glance, I'm only looking specifically for 5 things. Once you figure out those 5 things, well, number one, if it's at an all-time high, no thank you. I don't buy at the high. That's when it's supposed to be selling. Buy low, sell high. Who the hell buys high and sells it lower? Because where is it going to go next? Do you think it's going to go higher just because you bought it? Maybe it will. Maybe it won't. I don't want to take that chance. When it's at a high, all-time high, I don't want nothing to do with it. I'll keep my eye on it when it pulls back down again. Because when it goes up, yeah, there's going to be people just like me taking profits. And when you take profits, the stocks drop. Okay, number 2, I don't want it in an absolute bottom. Well, kind of do, because I want to see where the bottom is. Because I prefer it to be at a bottom, because when it goes down, it hits the bottom, it usually bounces back up again. So high, no thank you. At a low, yeah, take another look. But it should take you 3 to 4 seconds. That's about it. Once I do that, then I want to check out the numbers. 95.61, the closest one's going to be the 96, 117. That's more than 1%. How did I do that so fast? Well, let me walk you through it. 95.61 is the current price. Okay, you can't argue with that. It is what it is. Now, the next thing you really can't argue with are the strike prices, because somebody else is in control of them. All we're doing is looking at what they're offering. That's it. That's like when you go window shopping. You go to take a look, you take a look at the price. Okay, that's what it is. That's what we're doing. We're window shopping. 95.61, the closest strike price. See, 91, 92, 92.50, 93, 94, 95, 96, 97, 97, 50, 98, 99, 100. Now, I don't make up these numbers. Someone else does. Okay? The owner of the store, the market maker. Okay? You'll hear that a lot, the market maker. That's one person who opens the store and closes the store every day. Think of your neighborhood store. Circle K, Quick Mart, Quickie Mart, 7-Eleven, Quick Stop, Super Stop, I don't know, whatever it is. That's that store right around the corner, the convenience store. Someone owns it. That's the person who does the buying and the selling. Okay, he buys a gallon of milk from the farmer for $3. He sells it to you for $3.25, $3.50. His profit is the difference between the two. Exact same thing here. The market maker, he's the one buying the stocks. He buys them at the bid, $94.04, and then he sells them to us at the ask price, $96.46. Now, I don't like it when they do this at night, because it's usually only 1 cent, 2 cent, 3 cent difference between them, especially when you have not 4,900,000, because he makes whatever the spread on this multiplied by 4,900,000. So if it's a penny per share, he makes like 40 grand, about 40 grand a day, 40, 50 grand a day at 1 penny. So 1 penny spread, he makes 40 grand. 2 penny spread, he makes 80 grand. Okay, so whatever the spread is, you multiply it by how many shares being traded. That's what the market maker makes. So he's in business to buy and sell. He doesn't really care what the price is. We do. Because he just opens the door and say, hey, we're open today. Yep, we're offering at $95.61. Who wants to buy? Who wants to sell? And then 4.9 million come in, say, hey, I want to sell mine. Oh, buy them. I'll sell mine. I'll buy. That's what it is. It is what it is. 4.9 million shares traded on Friday. This is the current price, $95.61. Great. What's the closest strike price? Argue all you want. $95.61. The closest strike price is 96. Okay, it is what it is. 96. Go over. What can I buy it for? I mean, what can I sell it for? Because remember, I don't buy options. I sell them. Because if 80% of all options expire worthless, why the hell would I want to buy one? That's the 80-20 rule. I want to be on the 80% side. Now, don't get me wrong. The 20% side sometimes can be very profitable. But at my point in my life, I don't want to take that chance. Okay? I want a trading strategy where I make money if the stock doesn't move. Well, that's great. Okay? I want to be on the favorable side when it comes time to buying and selling. The seller wins 80% of the time. The buyer wins 20% of the time. What side do you want to be on? So I don't buy options, I sell them. Okay? So this is the buying side, this is the selling side. So the 96 is selling for 117. Well, how do I know that's more than 1%? You move this decimal point over 2 places. Okay? $95.61. Well, what is 1% of $95? 1% of 95 is 95. Think about it. 1% of 95 is 95. Okay? What's 1% of 101? 101. What's percent of 173? 173. You're just moving the decimal point over 2 places. $95. 1% of $95 is 95 cents. 1% of $150 is $1.50. 150. Just moving the decimal point over 1. So if it's more than 1%, it's a hell yeah. Okay, so 95.61, I'm selling the 96s, it's 117, that's more than 96, that's more than 1%, that's what I'm looking for. Okay, well, look at the motion. Down, up. Well, it's definitely in an uptrend. The high of the year is here, the low of the year is here. Well, where's it going next? It's going up. Okay, but that is for the year. That is for people who trade on a yearly basis. Well, that's not me. I trade on a weekly basis. So I want to take a look at the closest I can get to be in my favor. Well, where's the 13th? So I'll go back to the 13th. There it is right there. So 30 days ago, okay, that's what, 5 weeks? 4 weeks, 5 weeks? 1, 2, 3, 4. 4 weeks. 1, 2, 3, 4. 4 weeks ago, right here, a little over 98 was the high. Then it came down, here's the bottom right there, just a little bit below 89. So from there to there, that's the profit taking. So, all right, I'm going to take my profits and go home. I'm going to grab my marbles and go to another sandbox. But at the bottom here, she shoots up again. Okay, so we're definitely in an upward trend. But here's the thing. It's already moved from here to here, which from 89 to 97 is $8. Now, $8 on an $89 stock is what? 9.5%? Not quite 10%. But still, that's a little over 9% move. So how high is it going to go before people start taking profits? Well, I start taking profits at 2, 3, 4%. See, it goes up like 2 or 3%, I'm out. I'm not greedy. I'm not looking for a huge amount. I'm just looking for 1%. Okay, so if she goes up a little bit, I'm out. But this is going up almost 10% already. So can it go up further? Yes, it can. Is it going to? Color of a different horse. Okay? So the 96s are going for 117. Is she going to continue going up? That's a question we will soon find out if you like ConocoPhillips. So let's actually do a covered call on ConocoPhillips so you see how it works. All right. So 95.61, we're going to do the 96s. Let's get rid of this. One thing I really like about Think or Swim, it sets everything up for me. All I have to do is just change what trading strategy I'm doing. So I change it from a single option. Okay, these are all my choices here. I'm just going to do this one right there, the covered stock or a covered call or buy right. They have a lot of different names for it. And they literally have hundreds of videos available online explaining what it is. But basically, you're buying something at a price and then you're selling it to someone else at a different price a different day. That's it. And for that privilege, that person is going to give you a premium. That's what I'm chasing. I'm chasing the premium. I'm not chasing the stock price. I'm not chasing the option. I'm just using them in order to collect the premium, which is the insurance payment. We'll explain that a little bit later. So we're doing the 96s, right? The 96 is right there. All right, there's the price right there. I'm going to buy it. And then I just want to do one contract. And I buy it at the market. Now, there's a huge difference between buying at the market and buying a limit. Okay, a limit order means I'm going to pay this much and that's all I want to pay. Well, good for you. It might sit there all day long and never get filled. Now, I do a market order when I'm entering. Okay, I'm buying the stock, selling the option all at one place. They're both tied together, the option, the stock. Now, the reason why I do the market is because first thing in the morning, market opens at 9:30. By 9:31, I will have already bought it and I will already have sold the option. Before 9:31. Within the first 59 seconds, I'm in and I'm out. That's what I like. Now, do I care what I pay for it? Nope. Reason being, because the stock and the option are already tied together. Because it's a one trade, but it has two different legs. Or you can call it two trades. Buying the stock, selling the option. It happens so fast, it's done within 59 seconds as soon as the market opens. Market order opens up instantaneously first thing in the morning. So let's take a look at the order. This is what it should sound like. Now, I always tell anyone, anytime you do anything, okay, read it and then say it out loud. Because by hearing it, it might not be the same as what it is when you're seeing it. It's weird. Don't ask me why, but it is. All right. So I'm going to buy one covered call of COP, ConocoPhillips, 100, which means it is a weekly. 18 July 25, which means it expires on the 18th of July, 2025. That's this coming Friday. It's only 5 days away. That's what I want, 5 days away. The $96 call option against the COP, the stock, at the market to open to open. Now, I did not stutter and I did not repeat myself. It does say to open to open. I'm opening 2 orders. I'm buying 100 shares of COP, ConocoPhillips, and I'm selling 1 contract. Buying the shares, selling the contract. You need 100 shares in order to sell 1 contract. Okay, now I'm telling you just 1 because you can figure out how much money you have. This is where you should have paid attention in math class. You should have left that little girl, that little boy two aisles over alone and just paid attention to the teacher. Okay, so if 1 contract is $9,400, well then you know 2 contracts is $18,000. Okay, 3 contracts, $27,000, so on and so forth. Now, let's take a look at the numbers. Now, the reason why I like covered calls, remember I said simple, safe, predictable. Number 1, it's simple. It's one of the simplest strategies there is, covered call. You buy it at a certain price, you sell at a certain price. If I buy it for $1, I'm selling it for $1. If I buy it for 100, I'm selling it at 100. Same thing. What am I getting? I'm getting the insurance payment. That's it. That's all I'm looking for. Okay? When I said safe, the covered call is one of the safest trading strategies. They will actually allow you to do it in your IRA. Certain strategies you cannot do. Certain things you cannot buy in your retirement account. A covered call, you can. Simple, safe. Predictable. Max profit, 161.50. I already know what my profit's going to be before I even do the trade. That's what I want. I want to know what my profit's going to be before I even start. 161.50. My risk, the cost of the trade, including commissions and fees, $9,439, means I know what it's going to cost me. And I know what profit I'm going to make. But what's my rate of return? Well, for that, we need the calculator. And make it pretty simple. First, got to bring it over to that screen. Here we go, that screen. Clear that one. All right, so 161 is the profit. Is the cost $94.39, and that comes to a grand total of 1.7. 1.7% for 1 week. Well, I'm only looking for 1%. So here's some questions you need to ask yourself. Number 1, does it make sense? Okay, I'm buying it at $95.61. I'm selling it at $96. Okay, now I'm selling the covered call, picking up $161 per contract. Now I didn't say anything about the difference between the purchase price, $95.61, and the sale price, $96, because that's an additional 39 cents per share, or $39 per contract. Well, that's pretty damn good, don't you think? Additional money. But it's not what I'm looking for. Okay, I'm looking for the numbers to work right. Okay, remember I said, never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options only. And rule number 5, make sure the numbers work. Okay, so you're looking at the chart. Is it saying it's right time to buy on the chart? Well, yeah. Now, what am I buying? Well, I'm buying $95.61. I'm selling it at $96. I'm collecting $161. It's costing me this. And how much profit am I making? 1.7% for 1 week, 5 days. So what does that come to at the end of the year? Well, it comes to close to 80 or 90%. Well, that's a nice return, don't you think? So, question number 1, does it make sense? Question number 2, do I like ConocoPhillips? Question number 3, do I like ConocoPhillips at this current price? And question number 4, am I willing to buy it, sell a covered call every single week until it hits my target? Well, what's my target? 96. What's it at now? 95.61. It's not that difficult. Let's go to the next one. Let's go to the next one. Here we go. Next one. Okay, Abbott Labs was no. Lowe's, wasn't Lowe's no? All right, we need to get out of this. We need to get out of that. We need to get out of that. We need to go back to that and back to this right there. And here we are. So what did I say was next? Lows. Yeah, L-O-W. L-O-W. Yeah, it didn't look that promising because there's no really rhyme or reason or direction. It doesn't really just jump out and say, hey, this is where we're going. Not like this, see? I'm going down, okay? Right here is the bottom. Now I'm going up. Well, here's the top. Now it's going down. So where is it going now? So it came down a little bit. So it's no real jump out at you, here I'm going direction. Not like this one here. Look at this one. That's beautiful. That was, what, 3 weeks ago? That was lows 3 weeks ago. Okay, fine. All right, next was Procter & Gamble. Never really has a good premium, and it's a no. Look at this. Okay, what do you think? Down. Yeah, no thank you. Now, don't get me wrong. I love Procter & Gamble, just not this week. See, look, we have a new bottom right here. Okay, 1 day to the upside. We already have 1 day. So I'm looking for 1 more day to the upside, and then on the 3rd day, then I will jump in. But we got the bottom here, so we'll be looking this week at Procter & Gamble. Maybe it might be a yes on Wednesday or Thursday. Last one was Hewlett-Packard. I like Hewlett-PQ. All right, same thing here with this one. Okay, here's our top. She comes down, up, down, and here's the bottom here. She shoots up. Now she's just kind of like channeling to the side. No real rhyme or reason which direction it's going. Okay. Hey, I'm new. Do you trade options future? Jack. For the new people here, James is like on 7 different places. Thank you, Jack. You can rewatch. Yep, everything. Now, for those of you guys that are also new, if you don't know, okay, this is being recorded right now on YouTube on 2 different channels. So if you want to go back and take a look, you can. This screen here behind me, well, there's me standing in front of the screen. And then there's just the screen itself. Okay, so if you have the capability, you go into your other room on the big screen TV and pull it up there. Okay, but most likely you cannot see these little tiny numbers on your phone or your laptop. That's why it's on the big screen TV. Hey, I'm new here. I had a bad experience with trading gurus before. Legit question. Do you show your students your broker statements? How do they know you are actually profitable? Oh, JT, how are you today? JT is an awesome question. And believe it or not, JT, okay, my trading group trades every morning. They actually watch me do my trades. Okay, so I got 7 accounts. I share 3 of them publicly. So every morning, you actually watching me do my trades. And yes, I do show my totals. I show my wins, I show my losses. And on my live trading group in the morning, you can ask me any question you want. I do often take a look at other people's accounts and give my opinion. I can't tell anybody what to do. I could tell you what to do, but I'm not going to tell you what to do. Okay? I have no idea what's going on in your head, so I don't pretend to know. All I can tell you is, if it was me, I would do this, because I know what my goal is. Simple, safe, predictable, 1% per week. I'm not looking for a stock to shoot up. I'm not looking for that. I'm not looking for capital appreciation. That means you put your money into a stock and you wait 5 or 10 years for it to grow. No, it's not what I'm doing. If the company doesn't have dividends that are consistently increasing, I want nothing to do with them. Because there's over 10,000. I check every week. We haven't checked this week yet, but I check every single week how many stocks are available. Last week, it was 10,000. I think it was 136. A nice amount. May have been more. I don't know. But there's over 10,000 different companies to invest in. Okay, fine. But I'm only wanting to invest in the companies that have been around for decades. You know, Ford, General Motors, IBM, AT&T, Lowe's, Home Depot, Procter & Gamble. Give me some. Bank of America, Hewlett, I already said that one. Coca-Cola, Pepsi, Consolidated Edison. Companies that have stood the test of time. Those are the only ones I want to do. But that's me. I can't tell you what to do because I don't know any of you. I have no idea. I mean, yeah, I can call you up and we can have a nice conversation. That doesn't mean I know what's going on in your head. Okay, I don't tell anyone what they can do. I just, look and say, all right, well, what are you trying to do here? What were you thinking in this situation? What do you think is a good idea to do now based on what we're going over. Because see, the chart will tell us exactly what you and I are doing, the buyers and the sellers. And it's here, it goes down, then it goes up, then it goes down, then it goes up, and it goes down. Okay, that will tell us a story. This here will tell us another story. What am I buying it for? What am I selling it for? Is the profit there? Does it make sense? All right, anyway, let's go on to the next one. The next one was Humana. So let's take a look at Humana. H-U-M. Humana. Interesting. So quickly, 3 to 4 seconds. You ready? High, low. Where was it? Where is it? Look at the motion. Down, sideways. That's about it. Down, sideways. Okay, where were we? We were at 400. We are now at 230. Okay? What do the numbers look like? Well, 230.67, the closest one's going to be the 231, which they don't have a 231. So the 230s are going for 490. Well, that's nice. The 232.50s are going for 380. That's nice. The 235s are going for 290. That's nice. Oh, I love the numbers here. Those are awesome. But what is this telling me? Now, this is the whole year. Great. The numbers look good. The 1 year chart looked okay. Well, let's jump in and take a look at a couple more charts just to deep dive to see where do we think it's going next. Because if I'm going to jump in tomorrow morning, I want to know, is it a safe bet? Vivian, hey, Vivian just saying hi. Is it a safe bet to jump in tomorrow morning? And by the way the buyers and sellers are buying and selling, what will my chances look like getting back out on Friday with my profit so that next Monday I get to do the whole thing over again? It's kind of like a game for me. Okay, so just on a side note, the second time this year this has happened. Now, this hasn't happened that often. Okay, now remember I told you I had 7 accounts? 7 accounts. Every single one of my positions in one of my accounts, all gone. All gone. I'm in 100% cash game, which is rare. It doesn't happen that often. Okay, because when you do a covered call, you buy a stock and you sell it to someone else for a certain price, well, they have the right to buy it. Well, great. I'm making my profit. I really don't care. Seriously. It's hard for some people to understand. I really don't care. I have only two criteria. They're not that difficult to understand. Number one, is the company consistently profitable? I honestly don't care about the stock price because the stock price is nothing more than our perception of the value of the company. It's got nothing really to do with the company itself. See, when the stock went from 400 down to 200, did the CEO get on the phone and say, hey, spread the news, the stock is down, everybody stay home? No, doesn't work that way. Stock go down, they don't care. You're here for 40 hours. Punch in, do your work, go home. It's that way. This is nothing more than our perception of the value. Fine, but is the company consistently profitable? Do they make more money than they did last year, than they did the year before, than they did 5 years ago? Are they consistently going higher and higher and higher on their dividends? Because the dividends is a portion of the profits. And if they keep increasing, well, they got to be making more money because you can't give away more money unless you have more money to give away. It kind of it's just so common sense. It's like it boggles my mind why people don't get it. If the company's profitable, yeah, they're going to give me a nice profit, a nice dividend. Okay, so Humana, the 1 year, the number looks good. Fine, let's dive in a little deeper. A year ago, we're at 407. A little on the pricey side, but hey. Now, looks like we have a double bottom here. Check it out. 212 back in May, and then 212 back in October. So it hit 212 twice. And where is it now? Right now it's at 230. All right, so let's take a look at the last couple of months. Now here's the last couple of months. Same thing. High, low, is, look at the motion. Down, up, down, up, down. Now that does not look that good. Well, it doesn't look good in the sense of jumping into it tomorrow, but it does look good for a setup. Well, what do I mean? Let's zoom in a little closer. Here's the last 30 days. 30-day bottom, she shoots up, profit taken, it comes down. Here we are now. Great. Look where the bottom was. Look where it is now. Now, what do you now logically? Now, without going into the news and you know who's doing what in the company, what new product, other than that BS, just by looking at this, bottom's here, it goes up, it comes down. Hypothetically speaking, think of it elementarily, okay? As if you were a 9-year-old. Well, here's the bottom. It went up. It came back to the bottom again. It should go back up again. Great. It probably will. But when? When? So we're going to be watching this week. Well, because I already own some Humana. So that's one of the reasons why we're going to be looking at it. But seriously, I'm going to be looking at it this week because look, 30-day bottom, 227. She jumps up to 252. That's a nice jump. That's like a 10% jump. Now she's back down again. Great. When is she going to turn? When she turns, I want to jump in. All right. Next. So Humana is going to be one we should keep our eye on. As soon as she turns around, yeah, I'll jump in, take a look at it. I'll let you guys know. Next on the list, Kohl's. Now, here's something a lot of you don't know. Now, the trading strategy that I do, you know, I'm usually in and out. I usually never hold anything long term. For me, long term is 30 days. Last year, the longest I've ever held anything was Kimberly-Clark. I held it for 9 months. Longest I've ever held anything. Didn't do it on purpose because the stock dropped, went sideways, and it took a while for it to go back up again for me to be profitable again. But in those 9 months, this is one of the reasons why I love dividend stocks, specifically dividend stocks with weekly options. Because in those 9 months, I collected 3 dividends and over 35, 38, 39 premiums. Every single week, I will sell a covered call against every single position I have. If I have 10 positions, I'm selling 10 covered calls every single week. Everything I own has a weekly option attached to it. Because I'm not going to marry one of these things and take it to the grave with me. No, I want the cash flow. It is what it is. All right, so Kohl's. The reason I was saying that is Kohl's, I've owned this thing for over a year in one of my accounts. Why? Well, because it consistently gives me over 1%. Now, I originally bought it at 22, way up here. But now it's at 9. They have something that's called dollar cost averaging. So at 22, then I bought some at 16, bought some at 12, bought some at 6. So now my dollar cost average is somewhere around 12. So the stock is at 950. Now, I'm not selling the 950 option because that's too risky, but I will sell the 12, which is going for, ugh, that's crappy. What the hell happened there? I shit you not, that's crappy. Huh. The 1150 is 3. Oh, wow. I haven't seen it that bad. Usually when the options get bad like this, yeah, that's usually when I stop trading that stock. Usually. I mean, ET, Energy Transfer, AG&C, I think was the other one. But it's like 3 or 4 of them that the options look absolutely horrible. So I just don't trade them anymore. Maybe Kohl's is taking the place. I don't know. Hollywood Hustle made 5% each week over the last 2 weeks. Cool beans. Gallants, I can explain it to you, but I can't understand it for you. I like that one. I'm going to remember that one. I can explain it to you, but I can't. Wait a minute. I can explain it to you, but I can't understand it for you. I'm writing that one down. I'm gonna make a T-shirt with that sucker on it. Hold on. Sorry, I write slow. I love that one. That's freaking awesome. Gallant, hope you don't mind. I'm stealing that and I'm putting it on a t-shirt. I can explain it to you, but I can't understand. I can't even say it without laughing. All right. Uh-oh. Uh-oh, I missed some of these questions. All righty. Where are we? Uh-oh. Uh-oh. Where are these questions? All right, we did that one. All right, looking at your Coles position, account 1 and 2, I see you are rolling your strike price down over time. Isn't that risky? Yes and no. Okay, holy bad guys. He's mentioning that every once in a while, and I do it every once in a while. I will roll my stock price down because sometimes rolling it forward is not profitable, and if you're underwater, you cannot let it go for less than a windfall. So anytime you lower your strike price, yeah, now you're stuck in it a little bit longer. And yes, I am stuck in it a little bit longer. What is the name of this website you said you preferred that shows this calendar? Leah, this calendar that I was just showing, that's on Thinkorswim. That's not a website. That's a trading platform. That's where you actually go to trade stocks. But you can go to Google or Bing or whatever trading, search engine, whatever search engine you like to use, and just put it into the search engine, dividend stock calendar, and one of them will pull up. And you can, now I like this one because I can put my own stocks in there. Holy, I own KISS at a current loss, but I'm worried about getting called away at the strike price below what I bought it for. Now, holy bad guys, I understand completely. I really do. A lot of companies have great premiums, and some of them don't. Now, just recently, hold on. Just recently, I'm learning that the premiums for Coles is dropping, but all the numbers are. Take a look. The bid 774, the ask 965. That's a huge spread. Okay, when it is trading during the days, okay, the spread's usually only 1 to 2 cents per, between the buying and the selling. So I think the market makers purposely change all these numbers to makes it difficult for us to do our work when off hours. Okay, so check on hours because as soon as the market opens, all these numbers are going to change. But the mathematics doesn't change. The equations don't change. What am I buying it for? What strike price am I selling? What am I collecting? Is that premium higher than 1% or not? Is the stock going in the direction that I'm going? Look at Coles. Here's the high, here's the low. Now it's going in an uptrend. You can't argue that, but that's for yearly traders. If you're a yearly trader, well, 30 days, what does that look like? Total different story. Okay, here's the last 30 days. Okay, here, up, down, straight up. Now, hypothetically, she should be coming down because she went from below 8 to 10. Now, I know 8 to 10 is not a lot. It's only $2. Okay, $2 is not a lot. But is it? Because $2 on an 8, see, here's the bottom, 8. $2 on an $8 stock is 25%. Think about it that way. If you bought here and it jumped up 25% in 1, 2, 3 weeks, 25% in 3 weeks, would you take profits? Seriously, ask yourself that question. If you bought it at 8 and now it's up at 10, which is a 25% increase, would you take it? It's a simple yes/no question. But think about it, 25% for 3 weeks, that's a lot. So people take that, and then all of a sudden she starts dropping again. Okay. Let's see, you got questions over here. Remedy, what happened to your other page? What other page? It's still working. Okay, both TikToks are still working, Remedy. What's your portfolio look like? A Bigs. Yeah, we already had a discussion about that. Uh-oh. Some of these questions. All right. Randall Ray, do I have to wait for 20 years of increased dividends to sell covered calls on your corporation? Randall Ray, that's totally up to you. But I can guarantee you one thing, okay? On my bonds, I'm guaranteeing 20%. And then these stocks, well, I'm dishing out to start a 20% per year dividend. That I can guarantee at the moment. What do you drive? Oh, I love it when people ask what I drive. Okay, what I drive is so irrelevant, it boggles the mind. Do you know that Warren Buffett still drives his old beat up pickup truck from, what, 40, 50 years ago? Okay. My vehicle, let me think, my vehicle is a 2000 Dodge Ram van. It's a conversion van. It's got a bed in the back, a bathroom, a little place where I can sit and watch TV. I'm a big believer on driving wherever I feel like it, pull over the side of the road, watch a movie, just chill out. Okay, no, don't have a Lamborghini. I used to have a Corvette, used to have a BMW, used to have all those kind of nice, neat, fun things. Yeah, it's not cracked up what they used to be. I'm a handyman. I like to fix stuff. And you can't carry 2x4s in a Lamborghini. Chuck Jensen, good evening. ITA, CJ, I never heard of ITA, and it's never a good sign when you ask me about something I never heard of. ITA. Yeah, hell no. I don't do monthlies. 2 reasons. Number 1, I don't ever buy at the high, okay? Number 2, I don't do monthlies. Okay, 18 July, 15 August, 17 October, 19 December. Those are months of the year. Basically, that means I can do that trade once per month. Once per month means 12 times a year. That's 12 to 24% per year. Now, some of you might be okay with 12 to 24% per year. But if I'm getting 1% a week, that's 50 to 100% per year. That's what I'm going for. Okay, so sorry, CJ, no to ITA. Playa! 305 La Playa, good evening. How are you? I'm lovely. Chauncey, can I do Maine? I can do Maine. M-A-I, whoops. Ooh, let me go back to here. M-A-I-N. Now, I'm going to hit this screen and I'm going to say no because I know that Maine, wait a minute, why didn't it go in? Didn't go in. All right. M-A-I-N. Okay. I know that Maine is a monthly optionable stock. I don't do Maine. I don't do monthly because I can't get the money that I'm looking for. Yeah, babies in the house. Sterling, Felix, what's going on? Okay, so sorry about that, Chauncey. I don't like Maine. I don't do monthlies. Playa, hope you had a great time. My grandson, I did. We had a blast. Went swimming in the pool. Went and got some fresh donuts. There's a donut shop right down the street. They make fresh donuts in-house. Now, I remember when Dunkin' Donuts used to make donuts in-house. Used to be awesome. 98 cents a dozen growing up. 98 cents a dozen. My mom could feed all of us for $1. Imagine that. Great. I want to learn this. Okay, Playa, La Playa, you've been here for months. Months. Okay. Let's keep on going. Joey V, do you always have 100% of your money invested? No. No. Now, Joey V, last year I had 95% of my money invested at all times. This year with TDS, no thank you. I leave 20 to 30% on the side because of TDS. Now, do we all know what that is? I hope so. Why don't you just use AI or a screener to pick your stocks? Dude, I've seen enough Terminator movies. I've seen 2001: A Space Odyssey. I don't trust computers as far as I can throw them. Sorry. The ex-dividend date is Friday. Okay, Chauncey. Do you offer trading classes? Yes, I do. Every Monday, every morning. Joey V, yep. Why would I want to buy dividend companies instead of S&P? Oh, I knew we'd find one sooner or later. Who is it? B. Nashty. All right, B. Nashty. Interesting play on words. All right, let's take a look. All righty. what we're going to do now, okay, BNASH-T, S&P. Now, would it be safe to say the SPDR, the S&P 500 ETF, is that a good one to compare it to? I'm just curious, okay? It says right there, SPY, the S&P 500 ETF. So let's take a look, and I'll tell you why I don't like it. All right, first I want to go take a look at historical data. All righty. Give it a second, let it load. All right, now, when I say, okay, BNASH-T, I'm looking for a simple, safe, predictable, consistent, profitable. I want profitability and safety of my, what do you call it? My nest egg, my income. All right, so here we are at Yahoo Finance, SPY, the S&P 500, okay? There's the dates, that's what we're looking at, and historical prices. All right, now I want to change this. I want to look at just the dividends from SPY. Okay? Dividends only. See it right there. Dividends only. All right. Now, the reason why I want to look at the dividends, because a dividend is a portion of the company's profit. Now, you may not think the S&P is the company. Well, it kind of is, because there's one person in charge and there's a bunch of other people doing what that person tells them to do, so to speak. All right, so here we go. Now, I want to take a look at 20 years, 2 decades, 20 years of the profitability of the S&P. All right, you ready? So 20 years ago would be 2005. So 2005, here it is right here. March 18th, 2005. Now, I'm going to read off these dividends. Now, if the S&P is consistently profitable, this number will consistently go higher and higher for the next 20 years, right? So let's try this. You ready? 2005, 46, 48, 52, 67, 51. Hold on. Did that just go backwards from 67 to 51? That's going backwards, dude. That means they made less money here than they did there. It's not supposed to work the way. It's supposed to go up higher and higher, not higher, lower, higher, low. No. Higher. Okay, it went backwards. There's once right there in 2006. 55, 57, 73. See, now it's going the right way. 55. Wait. It's going backwards again. That's twice. 65, 71, 77, 64. 3 times. 66, 69, 71, 56, 4 times, 51, 5 times, 50, 6 times, 51, 50, 7 times, 59, 48, 8 times, 53, 60, 65, 55. What was that? What am I up to? I forgot count. I lost count how many times it went down. Okay, consistency of profitability should be higher and higher. Hold on. I'm going to show you one that fits perfectly. Oh, wait a minute. Before I do that, let's take a look at the summary of the S&P. All right? Now, you understand what the summary is. It gives us an idea of how are they performing so far. Okay, are you ready? The yield, the S&P yield, 1.21%. Okay, 1.21%. So you're throwing your money into S&P, and it's giving you a return of 1.21%. It's right there, the yield, 1.21. Now, the year-to-date daily total return, 2.3%. We're in month number 7, okay? We're in month number 7, and the S&P has come up 2.6%. I'm looking for 1% per week. And this gives 1.2% for the year, and this year it's already up 2.6%. And why would I want to do that? So the question was, by BNASH-T, Why would I want to buy dividend companies instead of the S&P? That's your reason. The numbers suck, in my humble opinion. KG, what's happening? Cost basis is good. Yes, it is. What else we got? Good evening. I learn things every time you go live. Good. Lemonade. I couldn't giving up on all the upside. See, Lemonade is one of those guys. He wants upside. Well, he wants to buy a stock and have it going up, 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 up. There's nothing wrong with that. Just not what I'm looking for. Okay. Now, when you're not retired, okay, not retired means you could buy those stocks and just sit and wait because you're going to work every day and every week you get a paycheck, or every 2 weeks you get a paycheck. Well, I don't work anymore, so I don't get a paycheck anymore. So the income is totally reliant on me. Means I have to rely on myself to bring money in so that I can pay my bills. Okay, we're the only species on this planet that has to pay to live here. All right. La Playa, I'm learning more all the time. When I click on your profile, I don't see any classes or courses to learn. Well, you actually got to go to the profile, and then it takes you a link to the website. Because my profile is one thing, because you're on TikTok. That's one thing. Okay, the profile should bring you to the10MinuteTrader.com, which has been up for over 15 years. Not consistently profitable. Do you expect the market to always go up? Nope. Benzel, you like that answer? Do I expect the market to always go up? Nope. There is a pullback, a crash, a correction, whatever you want to call it, every decade. Every decade for the last 100 years, stock goes up, stock market comes down, stock market goes up, stock market goes down. But the funny thing is, the companies that I like, well, they consistently increase their profits, even through the ups and the downs. Okay, think of that. Okay. Kai, how are you today? Darren wants to take a look at AT&T. So hopefully that answered the question for why don't I just put my money in the S&P? Because the S&P is not consistently profitable. Yeah, I know over the last decade, they've gone up an average of 10% per year. That's 10% per year on average over the last 40, 50 years. Fine. All right, keep on keeping on. All right, what else do we have here? I didn't find your number. Well, trust me, it's there. Okay, but you can send me yours. Don't put it here in the chat. Just send me a DM. My DM should be available up there because you're on YouTube. Where do you get the info about the company's longevity and their dividends? Oh my goodness, really? Here we go. You ready? Now the question at hand is, where do I find the stocks that have consistently increased their dividends? Well, someone else does it for me. Isn't that weird? Dividend Kings List 2025. You go to Google. Dividend Kings List 2025. 47 companies have consistently increased their dividend payments to their shareholders for 5 decades. That's 50 years. Dividend Aristocrats, 25 years of increased dividends. Dividend Champions, 25 years of increased dividends. They got a little bit of different rules between the Aristocrats and the Champions. The Aristocrats are a little bit more picky. Then you have the Dividend Contenders. That's over 300 companies right there in those 4 lists. And then for the fun of it, we're going to throw in Warren Buffett's list. Well, because it's good enough for Warren, it's good enough for me. So that's where I find all the stocks that consistently increase their profits. Those lists. And those you can get on Google, Bing, or whatever search engine you use. Sterling would like to know what to do about his UPS. Well, here's the thing, Sterling. You're in UPS at 109, and it's at 101. Okay. Well, let's take a quick gander. You ready? The high, 150, that was last year. The bottom right there at 90, that was in April. That's TDS day right there. Let's zoom into that. Ooh, excuse me. TDS day, right there, 49 is the bottom. Goes up, and she comes down. Now, you said you're in at 109. Well, this thing hasn't seen 109 for a long time. Nothing. My portfolio is primarily dividend stocks, has killed it for the past 2 years. Okay. No one makes 1% a week. No one. Mr. Wales, you're absolutely 100% correct. But just for the fun of it, Mr. Wales, considering you're new here and you know more than I do, let's just go for, basics. I love it when someone comes in and insults me without any, what do you call that? Standing. Ooh, good legal term, standing. Okay, so Mr. Will, I have 7 accounts. I share 3 of them publicly. I don't make any, I don't use smoke and mirrors. I show you my profits. I show you my losses. When I win, I show you. When I lose, I show you. I ain't got nothing to hide. All right, so account number 1, account number 2, account number 3. Now, if, Mr. Will, you have an issue with numbers, you can basically add it up yourself. So let's click on one right here. Okay, this is every single trade I made for the first week of the year. Over here, it was called the timestamp. Okay, January 2nd, 1031, January 2nd, 1033, January 2nd, 1034, January 2nd, 1040, January 2nd, 1043, January 3rd, 1440, so on and so forth, blah, blah, blah. And then over here, it tells you the quantity, what symbol it was, what expiration date was, what the call strikes were, what the premiums were, and what the profits were. So if you take the quantity, 10 contracts at $1.58 per share. Now, I don't know about you, but $1.58 times 1,000, well, that's $1,580 just on that one trade. Okay? Just on that one. And then we have another one here. Another 10 contracts, 158. Oh, 16 contracts at 148. Do the math yourself, dude. But here's the thing. Let's go over to here. You're right. I didn't make 1% in week number 1 and account number 1. I made 6.19. Account number 2, 1.82. Account number 3, 4.23. That was week number 1. Okay, so I didn't make 1%. You're right. Week number 2, January 6th to January 10th. 2.3, 1.7, 1.8. Week number 3, January 13th, January 17th. 4.8, 3.6, 1.8. 3.3, 2.02, 2.33, blah, 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 blah. Every single one of my trades is logged, is verifiable. Not only through this crap, but I also have a video where I actually do the trades live online. So I honestly really don't care whether you believe me or not, Mr. Wales. But yes, I do average over 1% a week for the past 15 years. Okay? So, believe it if you want. Don't believe it. Really don't care. No skin off my back. Nothing. My portfolio is primarily dividend stocks. I killed for the past 2 years. Cool beans. Sweet Den, thank you for that. El Pablo. Been following Jimbo for some time. Been up every week. Thank you, El Pablo. But I do find it rather insulting you call me Jimbo. Only one person in my life ever called me that. And that was my Aunt Mary. And I hated it then and I hate it now. Jose thinks Pepsi looks good. Well, let's take a look at Jose. See what we think. Pepsi. P-E-P. There we go. Ooh, interesting. High, low. Where was it? Where is it? Look at the motion. Up, down, up, down, up. What's going on here? 135.26. The closest strike price is going to be the 135. You might think it's the 136, but nope. It's 135.26. So the 135 is going for 219. Now, come on, that's well over 1%. So let's do a couple on Pepsi. First, let's take a deeper dive into the numbers, see if it's right. All right. So a year ago, Pepsi's at 164.59. The high of the year was the beginning of August, 181. Well, look at the last 60 days. Here's your top, here's your bottom. Now she's up. Okay, high, low look at the motion. Up, down, up, down. What's going on here? 2 days. Ooh, I want you to zoom into that. That looks really nice. That was a good pick. I don't know who picked that one. Last 30 days, right there. Here's your last 30 days. 30 days ago, we're at 131. We bottomed out right here, 128, just below 128. Jumps up to 137. That's like a $10 move right there, almost. Pulls back a little bit. Here's your new bottom right there. Okay? Thursday was higher. Friday was higher. Now, here's the little funny thing about this one. Now, let's actually go right on this. We get the exact numbers. So this is be a little tricky. You ready? On the 9th, the bottom was 132.96. The 10th, the bottom was 133.63, higher. The 11th, Friday, the bottom was 133.81, higher still. Okay? Higher, higher, higher. So it's definitely going up. But the tops, the 9th, the top was 135.38. The 10th, 136.68. The 11th, 135. So higher bottoms, but Friday has a lower top. What does that mean? I don't know. It's still a 30-day bottom right there. Not a 30-day bottom, but she went up, she pulled back. This is the new pullback number right here. She got 2 days to the upside. So could it go up? Tomorrow, if she is higher than 135, I'll be jumping in. But that's for me. Now, I can't tell you what to do, but it is what it is. Casey, this is a recording, obviously. Of course it is, Casey. Why would I be saying, of course it is, Casey? Anyway, a little upset that I'm not getting to your question when you post it. Terribly sorry. There's too many people here. Okay, good. Tennis Pro, what's happening? Felix. Okay, we already talked about that one. Tennis Pro, how you doing? Teradyne, Terry, I have no idea what no, I've heard of it. I don't know who they are. I don't know what they do, but you got to give me the ticker symbol. I may be ready to accept your opinion. Sweet Den, outstanding. Sweet Den, you've been here for a while. Okay, this is not your first time here. So keep coming back. See what, eventually you'll ask me. Jose, we took a look at that one. Hollywood Hustle. We still covered calls, my duty. Okay, Hollywood Hustle, thank you for that. It's still a contract. Yes, it is. Thank you for your return follow. Okay. Desubjugator. That's a weird name. I just want to be the bearer of bad news, okay? You said, thank you for the return follow. It wasn't me, dude. Okay, there's literally about 30 people pretending to be me. So, when I say, if you want to have a conversation, send me a DM with your number, I personally will call you. I'm not going to pawn it off to someone else call you. Nope, me personally. And I will guarantee you this one thing. I will not try to sell you anything when on a phone call. Okay? We're all adults here. We know how it works. However, someone just said, thank you for the return follow. Well, I'm going to tell you right now, that wasn't me. Okay? So a lot of you will get emails. A lot of you will get texts. A lot of you will get, what do they call those thingies? Telegrams or snaps or one of those kind of things. Yeah, that ain't me. Okay? When I say drop your phone number, I will give you a call. You're watching me live. You know what I sound like. You hear my tone of my voice. You hear my pitch. You hear my sarcasm. You hear what I say. Yeah, that's me. Okay? If you get anything other than me on the phone in this manner, you know it ain't me. I'm letting you know now. There's a lot of people that have been scammed that I've talked to, and I feel bad for those people because someone is out there being less than genuine. Okay, so if you want to have a call, say when I said thank you for the return fall, yeah, that wasn't me. So you want to have a conversation, send me your number. I will give you a call. Pay attention. Lily is not clocking for you yet. Are we talking about Eli Lilly? Eli Lilly is a little out of my price range. Yeah, I don't do stocks over 250. Okay, this is 793. It looks good though. Down, up, down, up, down, up. Right here, it's a nice movement. So if I did the 793s, more than likely, I'd want to do 795s. That's a nice number because that's the 795 is paying 1180 per contract. That's well over 1%. But I don't do Eli Lilly. Little out of my price range. I have no problem admitting that. I am brand new to TikTok. Well, if you're brand new to TikTok, still wasn't a return follow. I have 6,700 shares of Costco. How do I sell covered calls? Holy cow. 6,700 shares of Costco, C-O-S-T. Well, I don't know what you bought them at, but here's the thing. The high was over 1,100 bucks. Well, right now we're at 970. Now, not knowing what you jumped in at, she's been dropping. Okay, so as she's dropping, she's looking for a new bottom. Keep that in mind. Okay, it's looking for a new bottom. But if you sold, it's right now it's 970. You sold the 977s. That will bring you $6.85 a share. So do some simple math. Okay, hold on a second. Clear. $6.85 a share, and you have 6,700 shares. That's only $45,000 a week. That might not be enough for you. But here's the thing. If you're going to do that, keep an eye on this right here. Okay, as soon as she finds the bottom, a $900 stock has the ability to turn around and jump up again. So it's very important that if you sell covered calls for less than what you bought from, make sure there's enough space between where the action is and the strike price you plan on selling. And especially with 6,700 shares, you could hypothetically, hold on, let's go up further. Let's go up. You could go all the way out to 985, and that's paying $4.40 a share. Still a nice return for weekly cash flow. Whitehurst. So you're buying 100 shares, not poor man's covered call. Yeah, see, Whitehurst, I like the poor man's covered call. I do. I've done it before in the past. However, the risk involved doesn't actually thrill me. Let me briefly explain what a poor man's covered call is. So here, Costco is $970 per share to buy the shares, to own it. Well, if I just bought a call option to control it, that's too far out. I don't want to go that far out. Right there, January. Okay. All right. So instead of paying $970 to own the shares, I can pay $74 to control the shares for 187 days, which is 1, 2, 3, 4, about 5 months. So a poor man's covered call, you're controlling the shares, not owning them. But you can sell covered calls against them. That's why they call it the poor man's covered call. Great returns. However, high returns, higher risk. So I used to do them in the past. Because the option, even though I go further out and pay less, the option value still decreases. So I'm not always fond of the decrease of the long. So I just don't do them that often anymore. All right, BKE. I can't read that name. RG Tucson. Okay, RG Tucson wants to look at Bike, BKE. No, sorry, dude, I don't do monthlies. 18 July, 15 August, 19 September, no thank you. Okay, because the numbers just don't work. Okay, now for me, they don't work. If you like them, awesome, great. I don't do them because they don't pay me enough. And there's too many companies that have weekly options that pay me more. So, no, anything monthly, no thank you. Hollywood Hustle, Riot. Ooh, I like Riot. I actually own some Riot. RIOT. Oh, not this week, I don't. No, look at that. We're here at 6, 100% increase. Yeah, there's going to be profit taking any day now. Not something I want to jump into. Now, I already own some. I let some go last week because once you buy at a certain price and it goes up and up and up and you try doing a covered call, at some point it's no longer profitable. You just let them go. What do I think of BIIB? King, I've never heard of it. And if I've never heard of it, more than likely it's going to be a no. Biogen. Interesting. Hell no. Now, the reason why I'm saying no to this, number one, I've never heard of it. Number two, look at the option. Okay. It's right now, it's at 134. The 135s are going for 145. But look at the 136s, 0. So if I'm right, great. But if I'm wrong, I'm getting 0. Yeah, no, thank you. See, I like something that looks like Dell. Hold on. Now, you see the option price, strike price, I mean, purchase price is 126, 126.83. So I'll be looking at the 127. 126.83. The next one's going to be the 127. Well, it's going for 204. Well, the 128 is going for 165. The 129 is going for 122. So they're all going to give me over 1%. If I'm wrong, that's important to me. Because the next strike out, well, are they going to give me enough money? Because if the stock drops, I have to go to the next strike out to have that cash flow coming in. Now, I understand I'm looking for 1% up front. Well, what happens on the back end? Well, what happens if I don't hit my strike price on Friday and I have to carry it into next week? Well, what's next week's going to look like? Well, I like the numbers here. Dell, what's another one? Intel, INTC. Same thing. Look, the numbers, they look really good. So it's always going to be about the numbers. Is the company consistently profitable? Do they have weekly options? That's it. Consistency of profitability and weekly options. That's the only two things I'm looking for. So let's grab a seat and start answering some questions. Because we got a bunch of questions and we got 13 minutes before I'm done for the night. TMC. Too much candy. Ooh, that's not good. David Barton. TMC. Turner Movie Classics. Is that right? I have no idea. TMC. TMC Metals. Oh, yeah. No. Don't get me wrong, but look at this. A year ago, we're under $1. If we're under $1 a year ago, how can that thing have 20 years, 2 decades, 20 years of consistent profits? I don't know. Hollywood Hustle. A covered called is a contract that can be called away. Yeah. A covered call doesn't expire worthless. Lily is if it hits that target, you get paid for your shares. Yeah. JMR, can you pull the chart on SoundHound? Is it 20 years old? Plus, we're past timeline on that one. I never said worthless. It's a contract to sell 100 shares. You said it's not a contract, but it is, you could have your shares called away. Absolutely right. I'm in listen mode. So Lily, you're absolutely right. So it is a contract, and the numbers do change every day. And by the end of the week, we just don't know where she's going to be from Monday to Friday. Ooh, cool arrow, Alcoa. I love Alcoa. Look at that. Down, up, down, up. Nice movement right there. Now, I'm not going to go any deeper because I still got a lot more questions to go, and I'd like to get to as many questions as I can before 11 o'clock. Nike, Emirates, ask me tomorrow night. DIY luxury, cool. Lord Detroit, how do stocks typically move based on the EX date? They usually go up just before the EX date. Can you take 1% profit? Yes, you can. Zim, Tadil, how are you doing today? Now, Tadil, Zim, I've looked at it many times. Not what I'm looking for. What's the premium again on COP? Well, currently it's at 95.61. The 96 is 117. That's currently. However, Lily, remember, tomorrow morning when that bell sounds at 9:30 a.m., all these numbers are going to change. Okay? So always keep in mind, what's the current price? Okay? Where is it? Right there, what's the current price? What's the closest strike price? What is the premium that it's getting paid? Please fix it so I can watch you on 2X. Please fix what? Love your channel, by the way. Thank you, Brian. Ooh, I'm the cool mom. Woohoo! Pepsi looks good. Yes, you're right. It does. Apple. Ooh, I have me some Apple. Nice. Take a look. Down, up, down, up. Okay, cool. What's it looking like? 211. Well, the 210s look good, and so don't the 212s. Wait a minute. No. The 210s look good, not the 212s. I prefer oranges. JR, come on, that's whatever. Okay. Enrich and Son, 550. GE, General Electric. I love General Electric. Keep on keeping on. Dow, Brian, like Dow. You have to meet tomorrow. Dow looks good. I sold covered calls last week for 1.5. Jose, way to go. What's your thoughts on Verizon? Keeps going down. Well, when it hits the bottom, then jump in. All right, General Electric and Hertz. Well, I already own some Hertz, but General Electric, I have to keep my eye on it. Simone's in the house. When the stock goes against you and you are stuck holding it, do you stick to the original strike? No. Because as the stock drops, I lower my strike price. But I like to be far enough away where I'm not at risk of being called out. The number right here, the R, oops, let me open this up a little bit so you can see it. Okay. D is for the date. O is for the opening. H is for the high of the day. L is for the low of the day. C is for the close of the day. R, that is the range. That's how much the stock normally moves. That's how much the stock moved on that day. So if you take some calculations on how the stock moves on average between Monday and Friday, they'll give you an idea of what it looks like. All right, can it be at risk? So you want to make sure anytime you're changing the strike price lower than what you bought it for, make sure you're not too close to where the action is. And if you do, make sure you set an alert, because if the stock turns around and starts going up and you might get called away, well, you want to be alerted of that. So you set an alert, it'll get sent into your phone, you open it up and you say, all right, great, how do I deal with it? Why do you say options look horrible? What does that mean? Oh, Liberator. What does that mean? Okay. The current stock price, 211. So the strike price or the option price at 211, well, it's 325, 198, 107. Well, that looks great. But look at energy transfer. Okay? 17. The 17 is going for 48. Then it goes to 15. Then it goes to 3, and then it goes to 1. That's horrible. That other one we were looking at, it went to 1 or 3 a lot faster than it should have. Holy bad guys. You know, Michael, he doesn't always. He just rolls in the order to whatever strike makes sense. Makes the most sense. Absolutely. It just makes sense. It's me, babe. What's happening, BB? Jose, absolutely. I would take profits. Well, I would too. I did with Coles last week. Me too. Are spreads like arbitrage? Yes, they are. Buffett drives an old Cadillac with hail damage. Great price. Yes, I get it. Doing well off of RDDT. That Reddit? What options are we looking at? Okay, Amir, I don't know which one you're talking about right now because I get 6 different channels going, so following everyone all the time makes it a little challenging. Let's keep on going. SFY, Michael Banks. What the heck is SFY? Never a good sign if I have to say what the hell is that. SoFi, hell no. Number 1, it's a monthly. I don't do monthlies. The numbers just don't work. Okay, no matter what you do. Also, look at the bottom right here. TDS day to where it is now. Okay, all that jump from there to there. Yeah, no thanks. There's going to be profit taking any day now. No, thank you. All right, let's keep on going. Uh-oh, Real Time wants to know what TDS is. Somebody might want to tell them. Brandon, isn't there only a very small number of companies that have consistently increased dividends over 20 years? Yeah, as compared to how many companies there are altogether. Now, Brandon, stock market's been around for over 400 years. 400 years, all right? Now, finding companies that are consistently profitable for over 20 years, well, there's only about 300 of them. So, is 300 enough for you to choose from? Sweet Dan, yes. I found only 53 companies that fit that criteria. Only 53? I thought it was more than that. There's 300 dividend contenders. I'm sure some of them have monthlies. All right, and Ron, it's too close to 11. I want to answer as many questions as I can, so I'm not looking at any more stocks. Thank you. Yes, glad I caught the stream today. Still working in the system. Thanks, James. Rude dude. Holy cow, I haven't seen you in a while. Lily, thank you. You're welcome. Is Zim just not enough for you? Not old enough? I would say so. Zim's not quite old enough because there are other companies that I like. Hi, any thoughts about Walmart? Dennis, Walmart was the very first stock we went over this evening. Kevo, do you prefer to be called away? Yes, I do. I'd love to get all my money back every Monday. How do stocks typically move based on EX dates? Well, they usually go up before the EX dates, and they usually go down after the EX dates. Do you like to trade calls or covered calls? Covered calls. Because you're covered. Okay. Buffett is 93. He shouldn't be driving at all. Yep, I hear it. SoFi is a weekly. I traded it last week. It's weekly. Yeah, I get that. It's weekly. It has weekly option. Wait a minute. SoFi doesn't have weekly options. It has monthly options. See? ADM. Archer Daniel Midland area. That's a great company. To deal. Thanks. Have a good week. Will do. Yes, it does. All right, Lily, I don't want to sit here and argue with you, but SFI, SoFi, monthlies. 18 July, 15 August, 19 September, 19 December. Maybe we're talking about a different SoFi, but SFY is a monthly. Do you ever go in the money like 90 on Walmart? Easy Me 3. SOFI. Oh, yeah. SOFI has weeklies, but SFY, okay, SoFi, it's monthly. So two different companies. Got it, Lily? All right. All right, so that's all the questions on TikTok. Awesome, thank you, you're welcome. What do we have over here? Tiny Coco, how are you today? Drive to Succeed, how you doing? Ashamed Lieben, I like the way you're trading very convincingly, but margin makes you very greedy. You're absolutely 100% right. I only use a portion of my margin. Yes, two different companies. Teach me covered call, please. Okay, we are done for the night. I'm just finishing up a couple more questions, and that's about it. What's your take on ZVRA? Never heard of it. What do I think about Australian? Yeah, the Australian dollar against the US dollar. Yeah, that's no. Have a good night, James. I have, hope you have your portfolio Monday. Well, okay, watch the video. Okay, thank you. You're welcome. Let's talk about 4 trades, weekly margin, 75,000, just 1,000 every week on a lowest available rate. We're gonna have to do that another day. It's 11 o'clock. I usually finish up at 11, so that's a conversation. It's going to be more than 5 minutes. So I'm not going to stay for more than 5 minutes for something that it's going to take a little bit to. Ooh, I got a little hat. It's going to take a little bit more effort than I want to put in at this time of day. What are the possible outcomes of a covered call? Price goes up, what happens? Price goes down, what happens? What do you do? Okay, so Brian Cook. Price goes up, more than likely you're going to be assigned, you get all your money back, and you get to keep that premium. So you get all your money back on Monday, okay? If the stock goes down, well, you get a company that consistently increases their dividend, give you the opportunity to do it next week and the week after and the week after and the week after. Okay, so stocks go 3 different directions. 1, up, 2, down, 3, nowhere. Okay, so if it goes up, great. If it goes nowhere, great. If it goes down, then it's going to be a little bit issue. That's why we take a look at the chart to make sure we're buying it at the right time. The timing is very important. Your fan club has completed the first stage of the club quest. Club chairs have been unlocked for all fans to send and celebrate. Woohoo! I didn't even know that was a thing. Oh, that's great. It's hard to find good trade mentors in this space. Definitely will look into joining your group. Thanks for answering. JT, I'm here every night. And I'm going to apologize for some of you on YouTube. Way too many of you to answer all these questions. So you don't keep what you bought longer than a week. Nah, I did not say that. My preference is jumping in on Monday, being out on Friday. That's my preference. Doesn't always happen that way. Sometimes I have to carry it longer. And the possibility of carrying it longer, well, am I going to get a consistent 1% if I carry it longer? Because on Thursday and Friday, we take a look at the possibility of rolling it into next week. Okay, it's a little bit too late to explain rolling it into next week, but catch me tomorrow night on the next. But you got to catch me early in the night to ask me about rolling. All right, JT, good question. What happens if the company goes bankrupt while you're in the covered call position? Well, I'm hoping, JT, that you never buy something that's in that position. Most of the companies I'm looking at, most of the companies I buy, have historical performance of doing just fine. Flow 22, what time are you on in the evening Eastern time? I'm usually on at 8:30 until 11. Okay, it used to be 9 until 11:30, but I want to get to a little earlier. So JT, I haven't really ran into that problem because companies like, like AT&T, IBM, Ford, General Motors, I'm drawing a blank, getting late, Home Depot, Lowe's. I don't really foresee them going bankrupt without knowing. Now, when companies kind of like Walgreens last year, they started closing a lot of stores and they started having trouble with their earnings. Well, that's an indicator to not buy in them. Okay. Mangy. Hello, sir. How are you? I'm fine. Happy Sunday, Daniel. Wait, Daniel Berry. Which company? Okay, Luke, a little bit late to the party because I'm not 100% sure which one you're chiming in on, because I have 6 different chats going at the moment and I can't answer all of them as they come in. So I'm caught up with the questions. That means the time. Wait a minute. The time is here. Wait a minute. And oh, that's it. And now the time is near. And so I face. Hey, catch you guys in the morning. I'm going to be sending out the invites very shortly. So see you later. And so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain. Oops, wrong one. I've lived, ooh, that sounds terrible, a life that's full. I traveled each